starting. All attendees are in listen-only mode.
Okay, good morning everybody. Today is our last webinar for the year. Then we will actually restart the webinar session again in January. And today we just have a company initiation on Centurion Corporation Limited. Okay, so the last close price is 33 cents and we have a target price of 42 cents. The current dividend is about 2.01 cents, which yields it at 6%. So here are some of the key points of why we initiated. So there's a favorable demand and supply dynamics for Singapore purpose-built workers' accommodation. So as for by 2017, there will be about we estimate about 320,000 foreign workers will vie for 250,000 PBWA beds. So the demand for the beds will actually outstrip the supply. And the other thing is also, of course, the 100,000 beds out of the 250 beds, which is about 40%, are temporary PBWA and will face expiration in the near term. And what we mean about temporary, we were talking about actually the number of years on the land, right? So usually that would last about 3 plus 3 plus 3. So we are talking about a lease of less than 10 years. And the second point is regulatory pressure to improve quality of foreign workers' dormitory attraction to the professionally managed PBWA. So recently there's of course emphasis to improve the quality of the workers' dormitory, to add in more amenities, and of course to make sure that they are adequately furnished. So some of these are going to impose some of these new conditions are going to impose increased operating costs for the factory converted dormitories, and thus reduce the competitiveness. So one of the things of all these FCDs are generally the design. So they were not meant to be designed for living for workers' dormitories, not meant to be for accommodation purposes. So in order for them to be viable, that you can also expect some of the addition and alteration works. So all this would actually increase the capital expenditure for FCD operators. And the third point is more for the student accommodation for Australia. There's definitely an undersupply of PBSAs in Australia. And of course that poses a problem for urban planners, because students will compete with low-cost housing occupants and also for with workers in transport nodes and urban in city centers for private apartments. And the last point is UK student accommodation industry continues to present an attractive return. So the investment yield now is close to 6%. And the student to PBSA's bed ratio continues to be high, and with this the ratio is actually 2 students to 1 PBSA bed. So the demand will still be driving that. So a bit of background: the Centurion is actually a reverse takeover of the SM Summit Holdings, which was primarily in the optical disc manufacturing and services industry. So back in 2011, the optical sales comprised of 56.8%, and today it has dropped to less than 5%. So the value of investment properties and rental income has also for Singapore in 2012 was about 90%, but now they have diversified and spread out. So the percentage weightage has reduced to about 60%, both value and rental income. And on the backlog, there is actually 3 developments: land in Port Hedland in Australia, and the Bekasi in Indonesia, and Nusajaya in Malaysia. So that for ownership structure, we'll highlight that actually the top 7 shareholders are in the board of directors and senior management. So essentially, we believe that the decision making, right, the corporate direction would be in line with shareholders. So for Centurion, it's actually the second largest dormitory operator by beds, and is the only listed professionally run dormitory operator here in Singapore. And the key thing is, of course, the dormitories are also strategically located with long land tenures. The bed capacity is spread over 5 locations and is located to reduce the travelling time of workers. And each of the dormitory is not has sufficient capacity to capture demand across the island, yet it's not overburdened by too many beds when competition becomes keener. So each of the dormitory, they typically have less than 10,000 beds. So if, of course, in certain areas, for example in Tuas, where there's increased competition, maybe new supply is coming up, it will not be overburdened by the additional beds. So for example, some of the competitors, they have a single dormitory that holds about probably 16,000 beds. So as competition becomes keener, they will feel the pressure, right, because all their beds are located in one area. So the third point is the operations enjoy economies of scale, and this is actually a very good time for them to have this economies of scale because of regulatory requirements for them to increase the quality of the accommodation. So those operators with economies of scale will be able to have the resources to implement these improvements. So here's a list of all the operators. So we can see that actually amongst the top 10 operators, not many of them actually operate out from various locations. So the only one, the top one is actually Vobis Enterprise. They're operating out from 7 locations. Second is Centurion's Westlight, and the rest are mostly concentrated in a single area. So in that sense, we can see that actually in terms of strategy, in terms of planning, and how they plan the bed capacity island-wide, Centurion does have an edge against the rest of the other competitors. And also the captive audience for the accommodation, they are not strictly targeting workers from a specific industry. So some of it will be to cater for workers across all industries, processes and manufacturing. Okay, so in Malaysia, more approved FDIs will drive demand for reliable accommodation in foreign workers, and this is actually on the back of unreliable quality accommodation that has become a disincentive to attract labor, and it has posed a problem for MNCs to come in here to actually find reliable foreign workers. So Centurion has come in to fill that gap, right, by providing reliable accommodation. There's an incentive for workers to come in and thus provide the supply for the foreign MNCs' demand for these workers. And this, along the way, Centurion has built up a strong track record with the MNCs. So therefore, they are strategically located near to MNCs for this purpose. here the PBWA provide the purpose-built workers accommodation located in Malaysia. Okay, next will be the growing Chinese population, student population in UK and Australia. This is to emphasize the top line growth on the for education in UK and Australia by Chinese students. So you can see here that the Chinese student enrollments have been steadily increasing in Australia, even in number, absolute number, and also in terms of the percentage composition. And the visas granted to foreign students in UK has also recorded a steady increase as compared to students from India and Malaysia. So here are some of the catalysts, near-term catalysts for Centurion. So recently they have lifted the ban for foreign workers in Malaysia, and employers could bring in migrant workers after June 2016. So this is one thing which will actually be a tailwind for the workers, for Centurion. So at least there is we can go into 2017 without fear that this would actually crimp their growth prospects in Malaysia. And in 2015, English universities no longer face limitations on how many students they can enroll. And so this will, besides targeting international students, this will actually increase the student mobility for the UK students themselves, and this will definitely raise demand for student accommodation. So here we have the analysis and forecast assumptions for our model. So the lease on land for Westlake Tuas will not be renewed. Okay, this is just an assumption because the land lease expires in April 2017. So the management has not come forward to talk about whether or not they have received any in-principle approval that the lease will continue. So we just assume that it expires, and we also assume that the value will be reduced to zero and the property would not operate. So from there, we estimate the reduction in cash flow, and then we put in the assumptions in our we actually reflect this in our forecast. So the next thing is the contributions from the land from Nusa Jaya, the Bakassi district and Port Hedland are also not included because there's no visibility to the capacity that they will potentially yield. And two projects, Westlake Minyak and Westlake Juru, is slated to be completed in 2018, but we will assume that they will start contributing only in 2019. So some of these assumptions we have, they are more conservative, so as to bring about a better estimation to whether these cash flows, right, without all these contributions, would be able to support the debt that they currently have on the balance sheet. So we also assume that there's no further debt raising. Capital investments are limited to internal financing because at the moment now we estimate that the net debt to equity has reached 150%. We do not think that Centurion will stretch this debt any further. And from there, with the cash flow that we estimate, we believe that the dividend payout ratio of 40% is sustainable, and this would give the investor a yield of 4.8% to 6% for a share price range of 0.335 to 0.42. So here is actually the chart to illustrate, right, how it would look like all the way until to fourth quarter of 2019. Okay, so we have applied the DCF model. One thing is because it's already traded at a very deep discount to book, and valuing the properties for Centurion may not be make a lot of sense because of the short and finite leases on some of the Singapore properties. So the other way that we would look at it is to assess its strong cash flow and to determine what could be a more sensible price for the stock. So in the DCF model, we have excluded the cash flow for the Singapore properties because of that of some of the short and finite leases. Even for the longer ones, it's 20 over years, we cannot discount it to perpetual. So we have taken them out completely just for the Singapore properties. And we have maintained the dividend payout of 40% throughout. So from there, we can see that after the cash flow after paying out those dividends are still able to accrue the total debt of less than 12 times, which means is that they could still pay back their loans in less than 12 years. And the third point is, of course, at 42 cents, this price is still less than the exercise price for the warrants. So the warrants will not affect our target price. So at 42 cents, it is still a discount to the book value of 21%. And here's the 3-year historical price earnings ratio. So now it's trading at less than 1 standard deviation. And here's the price performance compared to STI index and Catalyst index. In the peer comparison, we have decided to compare it with UK listed property investment firms because first thing first is, of course, we do not have any Singaporean peers who are listed. And second thing is this model of earning investment income is quite similar to some of the UK companies. This is quite a common model in UK. So we have compared Centurion with UK listed investment firms that have interest in the accommodation business and have similar market capitalization. Okay, some of the investment risk here would be a reduction in number of beds. Westlake Toguan capacity is confirmed to reduce their bed capacity from 8,600 beds to 7,792 because the URA has decided not to grant their appeal. And as for Westlake Tuas, it's slated to expire in April 2017, so this is also a risk. So if it is not renewed, the number of beds in the portfolio will be reduced by 8,600. And the second risk will be the negative impact on weak currency. So the weak currency would be a problem for foreign workers trying to look for to earn wages in a country that is experiencing this weakness. So in Malaysia today, we are seeing that. So that may affect the demand for the purpose-built workers' accommodation in Malaysia. However, we would also like to re-emphasize that workers who are seeking employment would also be seeking employment through MNCs, and these MNCs may be higher up in the value chain, and therefore may command actually a higher wage. So the net effect could be less impactful, right? Because with the ability to earn a higher wage, they may actually look past the weak currency, the weakness from the currency. And the third point is unfavorable changes to the government policy. So this could happen as and when if the policy makers decide that they should impose some immigration restriction on student visas, workers permit, and some of the planning restrictions on land use. So this can impact the operations for businesses like Centurion. And competition from new entrants. So competition from we believe that the competition will be more acute from operators with larger capital, stronger balance sheet and experience. And this is because the nature of this business is capital intensive. They need to acquire, they need to design, they need to build, and need to own the assets. So any operator that has these three qualities, capital, strong balance sheet, and experience, would pose a serious challenge. So other risks would be to secure credit facility to roll over debt, execution risk, licensing requirements, and brand reputation. And here's the SWOT analysis. So the strength of Centurion is that is definitely a dominant player here, and their dormitories are spread out in Singapore. It's not overly reliant on one specific location. It is the only purpose-built workers dormitory operator in Malaysia, and this would give them a first mover advantage to allow them to build a strong relationship with the MNCs in Malaysia. And they have well-located student dormitories in UK and Australia. But what we mean by well-located, it means they are very close to city amenities as well as closely located to the educational institutions in UK and Australia. They have a strong brand name and management experience. The strong brand name would also help them with the Chinese business, because the Chinese students would probably have more affinity with the Singaporean brand. This will create a more sticky relationship between the Chinese students and the Centurion brand. And over on the macro side, the workers and students' accommodation demand is less affected by the economic cycles, because they cater to the rudimentary needs of the society. And some of the opportunities that we see here is that regulation can help the workers' dormitory business, right? By regulating the supply and demand, and as we can see that the demand for the imposition of higher quality accommodation can also help some of the value-added players like Centurion. And of course, the opportunities will come from the undersupply, which is continuing in undersupply for purpose-built student accommodation in Australia, and the continuingly strong student migration from China to UK. The weakness is currently it has high net debt to equity. So in order for them to grow by employing debt, that is definitely not what we see, because existing of this debt overhang, is, if you might want to call it. And the upside of the business is also limited by the bed capacity. So this is definitely a weakness for them. So Centurion should be looked upon as, from an investment point of view, is from an oversold position, not so much of a growth business. And the third point is it is a capital intensive business. Besides employing capital to acquire the assets, there's also operating costs, especially if they are required to actually maintain a high quality, a high standard of accommodation. So that would also actually increase the operating costs. So the threats, unfavorable changes in regulation. So it's a double-edged sword. So regulation could also could work in their favor, yet it could pose a threat to them. So that is something that we have to, on an ongoing basis, we have to be extremely vigilant. Regulatory changes can also increase the operating costs and capital expenditure for these operators. And lastly, competition from construction firms. This is something which is very characteristic of Singapore landscape. As you can see, that actually most of the operators for accommodation, they are also actually construction firms. So they could prioritize their own run dormitories over Centurion's Westlite brand of dormitories. So with that, we have come to the end of the presentation. So feel free to write in your questions in the question box. Thank you. Okay, we have a question on what is the country-wise distribution of Centurion's revenue. So as of FY15, right? Because we have to base it when they have reported the full year. So we'll use the FY15. It is estimated that we have about 64% comes from Singapore, right? Then we have about 8% from 8% from Malaysia, 8% from UK, and 20% from pardon me, 20% from UK, 8% from Australia, and 8% from Malaysia.
Hi, good morning. This is Richard speaking. Yeah, there's a question asking about hospitality REITs. The question is, wouldn't hospitality REITs be a more attractive investment considering that they are also oversold but has a higher and lower leverage? Okay, that um, that is not an apple-to-apple comparison. You're comparing a real estate company and a REIT. Their business model is different, and you would invest in a REIT and a real estate company for different reasons as well. So for REITs, it's not definitive, but the rule of thumb is that REITs is for um, recurring income through the distribution, and the objective is not so much on capital appreciation, whereas for a real estate company or developer, somewhat like um, Centurion, then the business model is different, where Centurion actually can have development properties on their books as well, unlike REITs where it's limited to only 10%. So the question about attractive investment, it boils down to the investment objective of the individual. There's a question on what is our top picks in S-REIT. So our top picks actually are First REIT, which is a healthcare REIT, Keppel DC REIT, which is an industrial REIT, and while we still have a neutral rating on Mapletree Industrial Trust, but we think that that is um, something that investors can consider as well now that the price has dropped, and yeah. Okay, there's another question about US 10-year rate has gone up, and it may make REITs and discounted less interesting for their gearing. I'm going to interpret that question to mean that with the increases, the increase in interest rates will be unfavorable for the REIT. So I can only answer the question for REIT, but not for Centurion. So my reply for REITs is that while the gearing is one part of the consideration, what you actually have to look at as well is because gearing is just a static number, you should look at the debt maturity profile, right? Because you can have a REIT with a high gearing, but there's no debt that's going to expire within the next 3 years. and on the other extreme end, you could have a debt, you could have a REIT with low gearing, right? But all of its debt is going to expire this year. So gearing is just one number. You should look at the debt maturity profile. The other thing is that concerns over higher interest rates that will impact the DPU. To address that, what investors should look at is the interest coverage ratio for the individual REIT, because the interest coverage will give you a sense of the sensitivity of the DPU change in relation to a change in the interest expense. There are some questions on the interest coverage ratio. To put it simplistically, a large number is better, a small number is not so good. It is a measure of the sensitivity or the proportion of interest expense that the REIT will have to pay relative to the income that it generates. If you tune into, I think the webinar from maybe 2 or 3 weeks ago, I put up a table showing some of the statistics for the industrial REITs. So you can go and take a look at that report, or go and take a look at the PowerPoint presentation from back then, maybe 2 or 3 weeks ago. 2 or 3 weeks ago. You can get a sense of the interest coverage ratio for the industrial REITs. Where you can find this information is for each of the REITs. They normally, every quarter, they will produce a PowerPoint presentation. It is normally listed in that PowerPoint presentation. They will disclose what is their interest coverage ratio. So as I said, in a simplistic way of putting it, a higher number is better. There's another question, whether is it foreseen that S-REITs will suffer another round of price correction upon announcement of Fed rate hike in December? Well, I think that when obviously the market trades on forward expectations, and if the market is already expecting a rate hike, then probably that rate hike is already priced in at the moment. The only thing left is how much of it has it been priced in. Price correction after the announcement, maybe or maybe not, because after the announcement, actually all the uncertainty gets cleared up, right?
Okay, thank you very much for your questions. This will end our webinar. So we'll see you again in January 2017. Happy holidays. Thank you.